If you're not ready to learn, I'm recording. I've started recording. You just reminded me because I was not recording before. Anyways, look at my screen right now. Let me cancel this. Please, guys, ask question. Because I have 10 people on this call, I will ask everybody. I will ask everybody on this call. I will ask everybody question. So, what are we looking out for now? If you see this chart is telling us something, but what is it telling us? What's this chart telling us right now? You will understand that, okay, in my own charting, I don't really use color coding anymore because I understand the positions already. So you need to understand the positions already. You don't need much color coding, so this thing will not be looking funny. You understand? So this is what? This is a downtrend market. Can you hear me? This is a downtrend market. So it's been a downtrend. What are we understanding from it? We're noticing that we're having higher high, higher lows, lower low, lower high, higher high, higher low, like that, until it got to this point. Yeah, where the market started ranging at a definite support and a resistance. What do I mean by definite support and resistance? It has an actual resistance and actual support that the market respects, that it doesn't go beyond or exceed or go below, sorry. That is it right here, right there. We are having the support, sorry, the resistance and the support right there. All right. So now, if you see this market, you will know that, okay, when something is ranging, your brain will surely tell you that, okay, this market is ranging greatly. You have to mark out, please mute yourself. You have to mark out the resistance and mark out the support. That is very effective. I really wish I could go back and start marking out this thing, but you know how to do markups already. So just do it correctly. You mark out your support, you mark out your resistance. All right. So now, I was opportune to see this market start from here last week or last 2 weeks. This is June 17th. The market closed here and started here. And fortunately, it closed above the support level, which means the market is going to go up after creating a tweezer bottom. It went up all the way. It went up all the way, and what are we expecting? It went up all the way. What are we expecting? We're expecting it to get to this resistance and drop, and that is actually what it did after creating a Harami candlestick, a Harami bearish candlestick. All right. So that being said, we've gotten note of that. The candlestick was in place. Then the market came down again, created a tweezer bottom, and went all the way back up, created a Harami, ranged 2 times, 3 times before it dropped. All of them below the resistance. So it did like that, went all the way. And what do we expect? We got to this level right here. Then the market, everything is on a definite resistance. The market is on that resistance. It is not exceeding it. It is not creating any higher high. It is not creating any lower low, except that resistance. All of them are just touching the same point, coming down, going up, coming down. That is how you know a ranging market. It stays on a definite support and a resistance. It doesn't exceed it. Even if it exceeds it, it is going to be the weak. Do you understand? It is not going to create, the most significant thing about the ranging market is it doesn't create any higher high. or higher lows, or any higher high that exceed the previous one. Do you understand? So like this one now, it created this higher high. This second one came here, they are the same level. This first one was here, this second came here, they are the same level. Do you understand me? That is how you know a ranging market. And the ranging market is always going to the right. They are always moving to the right. They are not going up, they are not going down. They are always going to the right, like that. Ranging market is different from a choppy market. That's something for another day, for another time. So the market got to this level, came down, and here now we have the break of that ranging market. If you can see what I'm talking about, drop some 222 on the chart. Did you see that the market, this is the definite support level here, all right? This red line is the support level here. Then the market is supposed to get here again and go up, but it didn't. It broke it. Can you see that? With this very full candle, the market broke through. Then we are now having what? A new lower low. That is something about a downtrend. Whenever the market breaks that ranging point, that is whenever it exceeds the ranging point, then if it goes below, you know that that is okay. Now this is going down as a downtrend because we are having a new lower low. Do you understand? But unfortunately, or will I say fortunately, it is still on that support level of the first one. You see that? It's still on the support level on the week. Do you understand? So this market came here and closed a little bit above it. Just it closed right on it. The second candle came down and broke it as well, but it couldn't go any further down. It went up a little bit and it dropped. Do you understand? Because of this candle we are seeing here, whenever the market closes below the resistance, the market is going to go down. Whenever it closes above the resistance, the market is going to go up. Write that down. It is very effective. It is very, very effective. That is what they call CSP, candlestick confirmation, candlestick pattern. You understand? So the market came down and went up back, now gotten back to the range of this. Do you understand me? This was meant to be a support. So because of the breakout, it is called the break and retest. The market broke it and retested back to the area. What do we expect? We expect a drowning. That is what price action says. You sell the floor of a downtrend. The market came back, tested it, creating a morning star, sorry, an evening star, and it dropped down all to this point. And now we are having a double top, a double bottom. This is just an analysis that I'm showing you before we go back to the Fibonacci. So we got to the double bottom, and what do we see there? We saw that the double bottom, the doji came up and closed above the support level. Remember, this is a good support. Look at this point all the way here. The market respected it. All through, the market respected it. You understand? And it went up. So why shouldn't you respect it at this point? So it got to this point, respected it, created an engulfing candle, and it went up right here, created a bearish, and it went down. Are you guys seeing it? Are you guys seeing what I'm talking about? So now, remember what I told you guys on the trend line strategy. I said before you can get a trend line correct, you have to get 2 points first. 2 points makes a line. 2 points makes a what? A line. 2 points makes a line. So now this is the first point right here. That is the first point. The second point is right here. Can you see it? Let me make it thick. Can you see that blue line? Can you see the blue line? Drop some 111 if you can, please. You see there now. The first point, I'm going to circle it. I love this color gold because I call the third touch of a trend line the golden touch. We have the second one. Sorry, not there. We have the second one right here. It must touch it. It must touch it. Can you guys see the blue line? You're not seeing it and you ask me silly question. If I respond to you, let me know first. All right, so he went here, the second touch. Then the market came down and went back up. The market went back up to this level. All right, so because of this is the second touch, we are expecting the market to come back to that level. And lo and behold, the market came back and made the third touch. And I told you guys during the Trendline strategy class, I said the third touch is the most effective. The third touch is the most effective. The first one and the second creates the trend line, either on a support or on a resistance. I will show you the effectiveness on a support level. All right. So he gave us the third touch. Now listen effectively. Not because of the market went to hit there. Then you'll be like, it has given me the third touch. I am going crazy. I'm going to place the trade, massive drop and all that, blah, blah, blah. The market may end up breaking your third touch and the third touch will be rendered useless. What do you do in this case? What do you do in this case? You have to involve other confluences for this. I get this thing a lot. I will tell you guys, like I may just call you now and tell you, okay, give me a chart markup, give me a chart analysis on this certain pair, then and send it to my DM. Then you go and mark up the resistance and support and send it to me like that. I'll be like, I don't used to say anything. I just, all right, congratulate you and that's all. And you tell me the market is going to go up, and some people may even come and even start explaining. I'll just tell you, give me confluence. You come and explain how the market is reacting before. I'm not blind, bro. I can see it. The market is reacting all those reactions. I can see it. I am just telling you, give me confluence. Tell me why you think, what is giving you that morale to tell me that this market is going to go down. That is what I mean by confluence. Don't come and tell me a piece two. Don't give me long story. Like yesterday and some other days, I was like, okay, I see that the market is going to do this, that. Yes, I understand. But that is not confluence. Confluence is strong validation that the market is respecting. The market is producing things, new strategies that if you add to it, it will correspond to what the market is doing now. I don't know if you get my point. That is why I'm introducing Trendline to you, introducing Fibonacci to you, price action to you, CSP to you. But one thing you should know is if you don't understand CSP, you can never place trade and it will click. It's not swear, because candle reaction is what gives you the go ahead. Am I communicating? Candle reaction is what gives you the go ahead. This market is what I call extreme beating. Like I really dealt with this market. That is why it has not resurrected. It does not stand up back. It is still, that's what I call 1 blow 7 die. It's still dying. It has not resurrected. It's still going down all the way. But I've left the market already. I don't need to come back to it. By 3 p.m., I'll be making a trade on USD. So it is having news. I hope the news is going to be effective. So now you've gotten your trend line. The market has touched it and given you the third touch. Let's say we experience the third touch without all this drowning and all that. What are you going to do? You just be like, Peg said that it's going to drown. It's going to go down. Yes, I said so. But what else is giving you that morale aside from me saying so? You need to look out for this. Yesterday, I gave a signal on AED card, and I told you guys 4 confluences that is giving me the morale for that trade to be a massive payout. for that trade to be a massive payout. And what are those? Let's go back to the chart. Let's go back to, sorry, WhatsApp. Let's go back to WhatsApp. Let me search for AED card ASAP. All right. So now look at this right here. You would see that I sent it to the group. The AED card bearish analysis. You would understand that the third touch was there, number one. The FIB is there, number two. And some other things you cannot see or understand. But now look at the confluence here. This is what I mean by confluence. I don't want you to come and give me narration. Don't narrate for me. This is it here. The confluence should display on your chart. Do you understand me? The confluence should display on your chart, not on words. Not on words. Don't tell me I can see that this happened to this and this happened to this. No. Let it display like this. Once it displays like this, me, without even you telling me anything, I have already know what you mean. I thought you, okay, if you show me, I will know already. Like, let's say somebody made the chart like this now and sent it to my DM and told me, okay, this is what I'm expecting. I'm expecting the market to go down. Then and I say, okay, what is your confluence? I'm expecting something like this. This is just all I need from you. This is just all I need from you. This thing, this message. Number, say 4 confluences at this state, at this, I'm already going crazy. Third touch on the trend line, of the trend line. Obviously, the third touch is there. Can you see it? That is the third touch, number 1. That is number 1 confluence. Me, say, let's say now is somebody like, let's say you sent it to me and I see this stuff. Only my head will be like, wow, third touch. I'll even go and look for the, I will go and look for the chart, the currency, to look for whether I'll enter the trade too. You understand? Because everybody's looking for money. I'll look for whether I'll enter the trade. If your analysis is correct, I'll enter. If it is not correct, I will correct you and we'll enter. You understand? The first thing you just tell me is, okay, third touch of the trend line. I saw it, is obvious. Break and retest of support. How come? I go back to your screenshot. How is it break and retest? This is it here. This is what it means by break and retest. This is the support level right here. This point is the support level right here. If you can see that, drop some 111 on the chart, please. If drop some 111, let me know what I'm doing. That is the support right there. Then this red bullish bearish candle came down, broke the support, went back up, retested, came down and created something like a W pattern. Create something like a W pattern and the market went back to this level. Okay, now now I'll not go back to the chart. Let me just analyze everything here. We went back to this level. Look at this red candle. Look at this red candle. It went to this point and came down with 2 massive bearish candles. It went down all the way and now give us a double bottom at this point. Can you see it here? Then the market went back up, giving us another double top. Now, this is the break and retest. The market broke this support, went back and retested on this level where this red drop. Do you understand me? Do you understand? Then that was when it gave us the third touch. That was when the market gave us the third touch. So now we are having number 1, the third touch on the trend line, which is obvious. The number 2, break and retest of support. Number 2, break and retest of support. Then number 3, CSP. Number 4, validation, Fibonacci validation. Once all these are 4 completed in your chart, once all these are 4 completed in your chart, my brother, my sister, go crazy. This is a strategy that I derived with using these confluences. Confluence gives you confidence. Do you understand? Confluence gives you confidence, and confidence gives you money. So now let us go down to this Euro USD before we go to the AED card. This is Euro USD. It's the same strategy. I did Euro USD before AED card. Do you understand? I did Euro USD before AED card. So Euro USD gave me the third touch, number 1. Do you understand me? Then that is number 1 confluence. Write it, please. Number 1, it gave me the third touch. That's number 1. Number 2, it closed below the resistance. It closed below the resistance. Do you understand? It closed below the resistance. And as it closed below the resistance, that is what I call CSP. Do you understand? It closed below the resistance. That's number what? 2. The first one is the third touch on the trend line. The second one, it closed below the resistance, which means it is respecting that resistance right there. If it closes above the resistance, it is not respecting it. Get this straight. If the candle closes above the resistance, it is not getting it straight. Unless you have patience, you will wait for the next candle. If the next candle comes, it is either it's going to go up or create a tweezer top. Listen attentively. Patience is key in trading, unless you're ready to lose your money woefully. So the market closed below the resistance. That is number what? 2 points. It is not because it closed the resistance. It is because it respected the resistance and closed under it. It's just like when you respect somebody, you have to greet the person. This one respected it and it closed under it. That is to show you that, okay, I humbly bow before you. You are the Most High. My Lord, my God. So that's just it. If closed under them, that is number 2. Do you understand? That is number 2. Number 3, you are obviously not seeing it, right? You're obviously not seeing it. Now, this is what we are going to do on number 3. That is where the Fibonacci comes in. What does Fibonacci do? Fibonacci validates, right? Fibonacci validates either the support, the support level, support zone, or support area, or either the resistance zone, resistance area, or resistance level. What Fibonacci does is to validate if that your resistance is accurate. It validates if that your support is accurate. So now I want to use the Fibonacci to check if actually this resistance, this one right here, that the market closed under, is actually correct. That is what I call confluence. If it is correct, it will give you mind, it will give you morale that, I am going inside this thing, I'm killing it. Now let's check. How do we draw our Fibonacci? You draw your Fibonacci on only downtrends and uptrend, on only trending market. You don't draw your Fibonacci on a ranging market. You don't draw your Fibonacci on choppy market. You draw it only on trending market, trending up or trending down. And obviously this is a downtrend. Do you understand? So now you have to start drawing the Fibonacci from the recent, right? From the recent higher high. If it is a downtrend, from the recent higher high to the recent higher low. From the recent higher high to the recent higher low. That is how you draw your Fibonacci. I will be sending my own Fibonacci settings for you guys. You people Fibonacci look different totally from my own, but it's not your fault because that is the default of Fibonacci. I'll be sending the settings, how you can go about setting your own so it can look exactly like mine. Then you understand what you're doing my way. You understand? So now we are trying to draw the Fibonacci from the recent higher high to the recent higher low. Don't assume that you see, remember, this candle that you're seeing here right now, all this candle you're seeing here right now, it is not in place. Remember that. this thing, we are assuming that the candle didn't drop. But we are trying to analyze that the candle is going to drop. Am I communicating? We are trying to analyze that the candle is going to drop. So have it in mind that this candle does not exist. So let me try and paint it pure black. It can't, it has, okay. All right. Shit, it went back. No problem. So what we're going to do is just leave it like that. Let me share again. Just take it to your mind that this candle is not here. Do you understand? This is where we are dealing with. This is where we are dealing with right here. This point. This is where we are dealing with here. From up to down here. That is where we are dealing with. So now, we are saying that, okay, this market closed below the resistance right there. But how are we sure that this resistance is a strong one? Remember, you've gotten 3 confluences already. The first one is the third touch on the trend line. Number 2, it respected the resistance right there, which is the break and retest. Remember, it broke it. This is the market. It broke it. Break and retest is very effective on either the support or the resistance level. They are very, very effective. Very, very effective. Mostly because it obviously shows that that market is trending. If it is a downtrend, it is going to break and retest. It is going to break the support level and retest on the support level, then go down. That is price action. You sell the support of the downtrend. That is price action going in place. So now this market came down, came back up. So now we are expecting the market to drown. But what is giving us that mind that the market is going to drown? Remember, the third touch on the trend line, the CSP, all right, and the market is respecting that retest zone. So now let us look for if this point is a good resistance. Remember what I told you guys, we are drawing our Fibonacci from the recent higher high to the recent higher low. You pick your Fibonacci tool, you check your own place. It is called the FIB retracement. So now, looking at this market, where is the recent higher high? Obviously, this is the recent higher high right here. Can you see there? Then we put it down to the recent higher, to the recent lower low. That is it right there. Look at it right here. Pick it right to this. This is it here. This is the, okay, let me show you guys. This is the recent higher high here. That's the recent higher high there. The black is the recent higher high. Then where's the recent higher low? Here. Can you see that? So now that is where we are going to start and stop. That is it. Start and stop. Bring your this thing. You come here. Starting from here. Then we are going to make sure this R0 is stopping right under the candle. The wick, not the body, the wick. You put it right there and you stop. You press the button, you stop. You take it out to be sure. Do you understand me now? Yeah. Do you understand me now? Let me zoom in back. So now looking at this market now, what are we looking out for in the FIB retracement? How many of you understood how I drew it? How many of you understood how I drew it? Drop some 333 on the chat. Drop some 333 on the chat if you understood how I drew this Fibonacci. One, two, three. Just 3 people. I don't know how I'm going to continue if only 3 people out of 11 understood the Fibonacci. Just 4. All right. I'm going to be sending another link to the group. If you understand, your assessment will tell If you don't understand, your assessment will tell. Expect a new link in the group ASAP.
Yeah. I said I feel invisible. They like probably what you gain to. I pop a burger retarded. Wait.